Hey, welcome back to Harvesting Income. Today we are going to discuss about an interesting fund which is known as the JEPQ, which is called the JEPQ. This is also known as the JPMorgan Nasdaq Equity Premium ETF. Uh, we are going to look at how this fund can help you unlock the top tech picks from the Nasdaq 100 index. Basically, the top stocks or stock selections from the Nasdaq 100 index, and also benefit from consistent yield. So let's proceed ahead. Okay, quick disclaimer. This presentation is only for knowledge and sharing the my experience. Plus, also this is not an investment advice. So please consult with a professional before you make any decisions. So with that said, let's quickly look at the fund details. The JP Morgan Nasdaq Equity Premium Fund. Basically, it has two-pronged strategy. First, they construct a portfolio by applying data analysis and fundamental research on the Nasdaq 100 stocks. And so based on that, they determine the mix of the portfolio. Rather than just trying to replicate the index, they're trying to make their own construction, which means it is an improvised version of the Nasdaq that they're trying to implement internally to select the right kind of stocks. And secondly, what they do is the fund writes out of the money calls on the Nasdaq 100 index to generate income, which is similar to what any other what called does. But the good news is they're writing out of the money calls, which means they're writing calls at a higher level compared to the market level at the time of writing the call, which means that that helps them to capture the side or the capital appreciation up to the point of the strike price, which is higher than the current market level, which means you are able to capture a good amount of capital appreciation in addition to generating yields in the form of premium income. So that's a good mix of income plus growth that most investors are looking for. So with that said, let's see how it works and also look at other aspects of the fund, which will be interesting. Uh, let's look at the key metrics. The ticker symbol for this stock is for this fund, sorry, is JEPQ, and price is 57.66. The fund was started back in May 2022. So currently it has about 3+ years of history and assets of about $20 billion, more than that. So which means it's a very big fund, like attracted a large amount of assets. And also they have a very attractive low expense ratio of 0.35%. So these are the good indicators that this fund is pretty much doing well and it is building up its track record in the market. And let us look at its performance in the next slide. I've just looked at the fund for the last 1 year, and let us examine the fund, and see how it has performed. And if I look at the table here on the right side, you see JEPQ and Nasdaq. So when I go down, the JEPQ's price currently is 57.66 at the time of recording. This is as of December 23rd, 2024. And 1 year ago, the price was $50.25. So which means the price wise, it has gone up, and it has gone up by 14.7%. Price return is 14.7% over the period of 1 year. And in the last 12 months, they have, delivered dividends of about 5.38. So $5.38 is the total amount of dividend paid in the last 1 year. So the dividend yield works out to 9.3%. So if you look at the total returns now, like price return is 14.7 and dividend wise it is 9.3. Adding the two, we get, to 24.1% as the total return, which is commendable, like 24% return in 1 year. It is good by itself by any means, but when we compare with the index, it has slightly underperformed, not much. When I look at the index Nasdaq, it is giving about 27% returns in terms of the price, and 27.4%, and that's the level that we are looking at. Even if I add the dividends to that, it will come close to 28%, and JEPQ at 24% is not that behind. So it is able to closely match the benchmark. So that indicates that it's a good performance so far. and they're able to provide, lower price returns compared to the index, but the dividend yields are pretty good for the fund. So those are the two basic points which I wanted to quickly explain to you. Now, digging closer into the dividend yield, like I looked at the dividends over the last 12 months, like from January 2024 to December 2024, and total dividends is $5.38, and the fund's dividend yield is 9.3%. Obviously, the index provides lesser amount of dividend yield. Now, when you look at the dividends, the lowest I could see here is 34 cents, which is the latest dividend. And the highest I could see is about 55 cents back in June 2024, sorry, May 2024. Overall, I can see that they are able to generate dividends somewhere in the 40 cents, high 30 cents or 40 cents range. So that's pretty good. On an average, this could be about 44 cents they're able to deliver. And this is the performance over the last 12 months. In future, we don't know how it would be. Like it could be more or less, but this gives you a kind of an indication that you know they are pretty much consistent. But the dividends go up and down because of various factors, including how the options are written and the volatility at the time of writing of the options, which will determine the premiums harvested by the fund. So that's how the income fluctuates. But you get an idea of how much you're getting every month, roughly. And when I look at the historical returns, I compared JEPQ with another fund, QQQ. And so I looked at this comparison on this tickertech.com or the dividend website where they capture the total returns of different funds. And here you can see the graph, like the blue color represents the QQQ and the black one represents JEPQ. Obviously, JEPQ is a forward call fund and triple Q is basically a index fund. So index fund obviously outperforms. Covered call is going to be lagging a little bit on that side. And from the date of inception, if you see, the total returns for the JEPQ is 38%, whereas for triple Q it is 60% roughly. So you can see over a longer period, there is a kind of underperformance. And when you look at the average annual returns, index is providing about 19.7 and the fund is providing 13.07. So those are the differences we see here. Average and return on the index is much higher than the JEPQ. Okay, the reason for that is there is a cap or ceiling on the returns in exchange for higher yields. So when you are investing in covered calls, you are sacrificing the capital appreciation in exchange for getting more income upfront or getting more regular income. So that's the trade-off that you're making, which is good for you because you're an income-oriented investor. You want income first, and you also want some capital appreciation. So obviously, there's going to be a little bit of trade-off there. So that summarizes the performance here. And I mean, overall, I would say that this is a pretty good fund, like for someone who is interested in Nasdaq or Nasdaq listed stocks at tech sector, and who also wants to benefit from growth as well as get some income on the side. It's a wonderful option. Okay, let's look at the pros and cons. Uh, the positives are there's an improvised construction of the portfolio based on Nasdaq 100, and the fund is able to do a better job of making their own selection of stocks and composition of the portfolio. And this moderates or lessens the volatility because of the covered calls. And obviously, the covered calls also generate income. 1 month out of the money calls are being used, and 1 month calls will quickly expire and give you the quick income. And there's a relatively low amount of expense ratio, which is 0.35%, and total returns are close to index, but this can vary in future, uh, depending on the performance of the index, depending on the performance of the stocks. So, but as of now, it is the performance is pretty much tracking the index very pretty close to it, uh, with a little bit of lag or with a little bit of underperformance. Okay, this fund may not suit pure growth investors who want to directly, invest in tech companies or the Nasdaq. That's pretty obvious. And secondly, the low dividend yield may be a con for some people, but keep in mind that you're getting a stable yield and also you're benefiting from the higher appreciation. So those are the only few cons that I could find. If you have any other, points or anything that you think that I missed out, or you want to add your thoughts, please comment below, and definitely we'll discuss in the future. And who is JEPQ suited for? This is typically suited for someone who likes newer tech companies or the Nasdaq index, someone who wants to just benefit from the growth in the Nasdaq index. That those are the people who would go for this. Or someone who is seeking high growth stocks or sectors, new technology, new kind of artificial intelligence or blockchain or many other kind of companies or sectors. And someone, and at the same time, you're also looking for income or yields. So, which is a unique situation, and this fund provides that. So there is also a need for investment option with lower volatility. Some investors are very crazy and they want to invest in the Nasdaq. They are they want to do it right away. But the problem is they have a fear of the markets, or probably they are not experienced. So they need to have something which provides a lower volatility. And JEPQ is actually suited for that segment and can cater to that segment of the market. So that summarizes like who the fund will be suitable for. So you can make your own, call whether this fund is for you or not. Having said that, now I will give you some few other options or funds which are similar. I'm just throwing some names which I found interesting. These are not recommendations. Please note that this has to be studied and you have to do your own research and study this. This is just a list of names which I personally like or I'm going to track in future. And by no means this is a ranking or any kind of rating that I'm giving, but this is just a list of funds. I'm just giving it to you. First one is GPIC, GPIQ from Goldman Sachs. It has an expense ratio of 0.35%. To put it in simple terms, this is actually competing directly with the you know JPEG fund that we are talking about. The strategy involves the similar Nasdaq constituents and also writing options. The difference is the GPIC fund follows the exact composition of the Nasdaq index compared to the JPMorgan one, which is doing their own kind of stock mix or portfolio mix. And this, other than that, everything is similar in approach and performance. It's kind of similar. And there's another fund from NEOS, which is called the QQQI. And this one has a higher expense ratio, 0.68%. And there's a reason for that. They offer higher dividend yield, probably in the double digits. I'm not putting any numbers here. Probably it could be in the 12 to 14% range. And the good interesting aspect of this fund is there's a possible upside capture when the market keeps going up continuously. They also buy deep out of the money calls to generate that extra upside or value, which maintains the net asset value of the fund and it enables the fund to capture more upside growth beyond the strike price of the return calls. So that's the reason why the expense ratio is pretty high. It's too technical. We'll go into that in the next session when we look cover these funds. And QILG is another very old fund, pretty much been there for many years, and it is the Nasdaq 100 covered call growth ETF from the Global X funds, and they have an expense ratio of 0.35. Again, competing in the same space, and they hold the Nasdaq 100 constituents of stocks. They hold the actual stocks in the Nasdaq 100 and write calls on the index. The interesting thing is they write calls only on half of the portfolio or 50% of the portfolio, which means the other half is like a Nasdaq ETF. One half is like a covered call ETF. The other half is like a Nasdaq ETF, which provides full growth. So you get a mix of covered call option and a pure play exchange traded fund, index exchange traded fund. So you get a mix of high growth and as well as a bit of growth and a covered call income. So that's the moderate yield with a higher upside potential that you get. So that is something you can consider. And there is also newer funds coming up. There's one called QDTE, which I've been closely tracking, and also a lot of people are interested in these funds, which because these are some the funds that are very popular on the YouTube, and people always talk about it. And Roundhill Innovation 100 I would call ETF. This is actually another ETF which is kind of based on the same index, Nasdaq. They use zero date to expiry options. They write options on every day. So since they do that every day, obviously the cost and the trading costs are pretty high, and the expense ratio is pretty high at 0.95%. And the more interesting stuff is they pay weekly dividends. They pay dividends every single week. So that's an interesting aspect. Like imagine getting you know dividends like your paycheck, like you're getting every week, not even bi-weekly, it's every week you're getting this paid. So that's something that attracts a lot of people who want to just invest some amount upfront and then get some dividends and then put the dividends back into the fund and get more dividends and so on and so forth. That's a good strategy, but just make sure that you do your own research and make your own analysis and look at your overall portfolio and then make a choice whether you want to add this to your portfolio. One thing I want to mention that this is pretty new. You don't have even 1 year track record. So if you are not in a hurry, just wait for them to complete a year, look at the performance, satisfy yourself, and then put in your money and jump into the fund. So yeah, that brings us to the end of the discussion about the JEPQ and JEPQ fund. I hope you like this video and hope you like this session. And in the future, we're going to do a lot of more deep dives like this. And keep following the channel. If you have any questions, comments, feedback, please drop your comments below. And I look forward to discussing them in future. Thanks for watching. Have a great day.